So in this recording, you're going to see that I made over $1,100 trading Tesla. And I just want to show you one of my fill orders, which you can see I filled 615 shares around 191 and filled 615 shares at 191.99. Now I'm going to break down the trade for you. All right, so looking at the 1-day chart, you can see in Tesla, I posted my entry at 190.98, 615 shares, and my exit 191.99, 615 shares. But just looking at just this entry, it wouldn't explain how I knew when to buy or had a better chance to increase my probability of making a successful trade here. So let's look at the 1-month chart. And anytime you're going to buy dips, you really have to do your due diligence and draw out your trend lines and your supply, which would be up here in your red, and then your demand. So what I noticed when I'm looking at the 1-month chart was there was resistance at the 200 level where it rejected here and it rejected here. The next thing I did was I drew a trend line from the lowest point, which was right here at 163.92 to 176.42 right here. And then I knew that this trend line continuing, if I can see any bounce near it in between 186 and 190, I would have confirmation that this trend line is actually working. So while Tesla was selling off from 200 today, we knew previously it bounced at the 190 level. So I knew that there was a potential support level here, even though there's really nothing here on the chart showing it. So I needed to seek further confirmation when buying this dip here, which we'll zoom in on. But earlier in the day, you can see the time frame right up here. It shows 11:30 right here. You can see the time frames 10:30, 12:30. It double topped here at 200, and you can see at 12:30 started coming down at 196. And I didn't want to buy up here. I wanted to wait because I was following this trend line. I was wondering if it was going to, from this bounce spot up back up here, and I was wondering if there's going to be a further bounce spot around 185, 186. So what made me enter here? So let's go on the 1-day chart and let's zoom in here, and I marked a few spots. So when it sold off from 200, it sold all the way up from up here, 200 to 195, down to 188. I still didn't make an entry. When I'm buying the dip, I'm not just looking at RSI and then just taking a blind look. Because look, if I add RSI here and you bought right here, that could have worked because the RSI was like 20. So that could have been an entry. But I wasn't willing to do that because the market just continued to sell off. So I don't know if Tesla's going to continue to sell off. RSI is not always just the best indicator to just buy. I like to look for further confirmation. So now we knew the RSI was low here. I still didn't purchase. So I watched here. It had the bounce from 188.65 up to 190, and then it started selling off. But notice right here is a little bit, it's a higher low. So from 188.65 to 189.47. But the first thing I looked for was once it started bouncing from 189-ish all the way up to about 190, I wanted to see when it started pulling back, how far was this going to pull back? So it pulled back from this range of 190 down to 189.5. The key was I wanted to see what it was going to do, if it was going to make a new high at this red candle. I wanted to see this come up and break right here. If it can make past this entry, this resistance level, this is why I drew out the yellow. So right here we had the 190.45. It sold off down to 189.45. What I liked right here is that it's higher than right here. So it shows that the buyers are starting to come back and the sellers can't push it down further and make a new low from this 188.65. So once my entry was right above this candle, and you can see that it moved up so quick that I didn't get an entry on this. I tried to buy the break of this at 190.5. I didn't get filled until all the way up here at 190.98. So this is my entry right here, right where my arrow is. So We saw that it made this low. We didn't buy. It came up here. There was resistance. It sold back off. It made a higher low, which is good. And then I wanted to see if it could break this candle right here. And this is your entry, the first candle to make a new high. And then I tried to get filled at 190.5, but it filled pretty quickly. So I got in 50 cents higher, 190.98 for the break of 191. And I took profits up here at 191.98 or 99. And that was like $615 right there. The next entry that I had to make was I wanted to see, now that it broke through this resistance, so that was the first trade where I made the 600. The next entry that I was looking for was I want to see how it holds up in this yellow bar, because this was resistance, then it got broken through, so I'm thinking it's going to support it. I'm watching it. It sells. I took my profits at like around 192. It comes up here to 192.55, wicks down very quickly. I'm still monitoring. It comes back down. I watch where it goes right here, which is the level, 190.5, like right here, 190.5. And then this is my entry right here. So right here you can see the 190.5. It sells back down. It still doesn't make a lower low. Notice that this low right here is 189.4 versus 188.65. So it's still making higher lows, which is important because I wanted to make sure that this is still holding here, which this is a nice higher low. And then if you look at this horizontal line here, it bounced right here. So this became support right here. So it stayed higher. Now that it started going, I just want to make sure it has the higher low. That's another checkbox. Then you have this resistance line at 190.5. So my entry is at 190.52 to break this level right here, which it goes in this zone. And that's why I like to draw these out as the day is going on, because all you see is this. As the day goes on, you'll start to see the yellow box I drew. And then you're watching it trade through as it goes through. So this is the entry as it's going through. So here we go again, it's coming up. It rejects 190.72, it comes back up. And now I can see that we're making higher highs and higher lows. So second entry is going to be, look, you can draw a trend line here, and it's making higher highs and higher lows. It's getting a little confusing with all these guys, so let me just get rid of all these. So we made that first entry, we made our money right here. We made $600 right here. Next entry, we see it sells off from 192.5 down to 189.5. It's still a higher high than the 188.65. Our stop is this, 188.64. It makes the higher low. It comes up here, and then this point entry right here, it holds the 190. It's not lower than this previous 189.36. Here's your stop if you're trading from in this zone. And let me just highlight that so you can see it. You put the rectangle here, and this would be your stop because you're any trade after this, because you want to make sure it's not going to break this new low. That means it's going to start trending down. So higher high, right, higher low right here. And then my entry again is through the resistance point where I found right here at 190.5, and I entered here 190.6, and then I exit the trade up here at 191.6. So a 1 point spread on two different trades, two different spots on Tesla. One right here past this resistance point from 190.98 up to 191.99. And then a similar entry right here at this resistance level at 190.5 up to 191.5 to make the 1100 for the day. So when you're buying dips, it's good to look at the overall picture and not just buying the red anywhere you just see it and hoping for the best. It's better off to try to see if you can draw any trend lines from the last month. Even a 5-day chart you can use. Just anything that will give you some confirmation that other traders are actually seeing this. Because if you're the only person seeing it, there's not going to be enough buyers. So you need confirmation and validate what you're doing as you're making a dip buy, because there are multiple times where you can buy a dip and it just continues to dip, where like Tesla used to be up here at 290 and you could have just bought anywhere in these areas. But there are clear channels that you can see that show that there's really no direction. It's just going to keep coming down. So you always got to make sure that you can draw trend lines to actually support your thesis of where it's going to go. That's what I wanted to show, just how I made 1200 today, just trading Tesla, and where my thought process was by drawing the 1 month chart, the lines bouncing off each other, and then zooming in on the obviously the daily, and using the 1 minute and the 5 minute to confirm. And this, I didn't even use RSI for this, because the RSI here at the 189 was super low. You could even see how we showed earlier in the video, the RSI here was less than 30. So that would have been a nice entry. But for, I'm sorry, right here, it was actually, yeah, it was less than 30. It was like 25. But I didn't even enter here because I didn't want to just buy the fallen knife. We want to make sure we're making higher lows, which right here is higher lows. This candle to this candle, and it keeps coming up. And this was our resistance, and it broke through. And then watch it again and see where it goes. Here to here is a higher low, and it was nice and even with here to show support from here to here. And as it went up, we watched it. It failed, went back down, and then it retested and broke through. And then here is your entry, because now it's above. Once it breaks through this resistance, you want to see if it acts as support, and then it starts coming up again, and then you buy higher and then sell high. So that's how I did my dip trade today on Tesla. That's what I try to do when I buy my dips, is I try to form those plots and then see if the trade will work out. And the stop is always the previous low of the candle, just to make sure you have a stop loss in order in case it doesn't work out for you.